That was a good intro. I actually like this tune. It sets me up positively to kick off this beautiful Friday webinar with you. Hello, everybody. This is Adrian CryptoBirb speaking to you. I should actually call myself and refer to myself more as Adrian Zlunchik, CMT, Charter Market Technician, to highlight the quality of the information that you're about to get throughout this information delivered show. Well, we're going to talk about for the next about 30 minutes about what is going on with the cryptocurrencies and every single thing that you have to know presently and right now about Bitcoin, how it all correlates and actually puts itself into relationship with the traditional finance. If you're ready to hear this and more, make sure to stay tuned. We are going there right in a second. How is it going, everybody? Again, Adrian's doing to CMT CryptoBirb talking to you straight from his beautiful office with Bitcoin on my, which one is it? It's my right hand, however, it probably looks as if it is a left hand, I imagine, and Ethereum on the right side, right? Whatever the twist is, depending from your angle. That is actually what is going on with finance. Our perception of the reality depends on the angle that we actually have a look at, right? To me, it may be my left hand. It actually looks if it's a right hand on your side. The mirror like reflections tend to be a little bit misleading at times, and it all depends again which kind of viewpoint, which angle we look at from the that would translate into defining our market behavior and our market related decisions, right? So this is all to say that there is no subjective reality. The reality is one. The reality is unbiased. The reality is fact oriented, right? Anything else is our perception, is our typically biased or prejudiced understanding for what's going on in the markets, right? So hope everybody is doing okay after this heavy intro. Tell me how you guys are doing. I can see already complicated simpleton. Greetings from New York City. Dropped in early. Hit the like and we'll be back for informative stream once you're live. We are back live, my man. Good to see you. All the blessings to New York people. This is incredible place. Tyler Durden, swallow the red pill. I love the name, my man. Congratulations. Hello, friends. Again, Razun, my good friend. Incredible legend. Everybody, you should definitely go and check him out on Twitter. Razun is an excellent team member of ours at the Burb Nest. He's incredibly talented person, incredibly talented coder, programmist. I could go on and on and on. On top of that, he's a great trader, chartist, helps us develop so many incredible, intelligent tools. Also including the position size calculator that you can get later into the show for free, right? It's pretty cool. My man, Stephen Orr, welcome, boss. How is it going? For those who actually don't know, I had great time with Stephen at the CMT Symposium 50th anniversary, the actual physical floor exchange in New York Stock Exchange, right? Nisi. So it was pretty wild. It was pretty cool. He's one of the excellent Bitcoiners. So definitely make sure you search around for Azure and hit the like, hit the follow button on his account as well as on Steven's, right? So go ahead and figure out Steven or that's definitely a good place to be on the internet, right? For reliable information. Tyler Durden again, greater in Seattle. All the best love to you in Seattle again. Razor, much love, but much love to you, my man, again. Of course, the reality is fact oriented. Like I said, facts over opinions. We cannot trade consistently and reliably and profitably on our opinions. We can get lucky. If you flip a coin 5 times in a row and it comes up heads every single time, it is not because of our internal genius. It is not because we're the greatest coin flippers in the humankind history. It is because we got lucky. And if we confuse luck for skill, then this is where it becomes extremely dangerous, right? Because we tend to believe, we would all immediately believe that there is something about us that makes it special. However, mistaken luck for skill is unforgivable trading sin and mistake that always eventually leads to ruin, because you build this fake feeling of overconfidence, of hindsight bias, this recency bias that makes us think that we're going to climb on and on and on and on up with the same results, right? So it is definitely impossible to keep consistently winning the lottery, right? If you enter a casino and you win, that doesn't happen every single time you come in there. Maybe it happens once every 1,000 times, maybe once every million or so. However, if you keep relying, keep producing, and putting in, betting, all your portfolio, all the money with no risk control on luck, you are lost. That is tough. However, maybe this comes up a little bit of as a wake up call. Stephen Orr again just left CBOE, telling them about crypto on TD Emerald Trade. Very good, my man. Keep up the great work. He's an excellent legend, everybody. So feel free to go ahead and Google about Stephen Orr. He's also on Twitter. Great guy. Everybody, let's roll in. There is definitely great update by Holger here, right, about the Fed minutes, right, that were just received, and there is some slightly hawkish tune to it as they hint potentially about the further increase in the interest rates, right? So about the further potential rate hikes coming in. Of course, there is strong dependence on what the actual data comes up, every single time. However, there is a chance for the next 25 basis point rate hike. We'll see about that. And I think what is most relevant is that as we go throughout the show, there's a model where the market leads, the financial markets lead the economic cycle by 6 to 9 months. So as soon as the stock market continues to climb up and pile up higher, basically this is going to be a stronger factor to take the economy out of the recession. However, it's such a deep yield curve inversion as we're looking at right now, still, that I'm going to come up shortly about. This is going to be extremely difficult to avoid recession. So, very funny thing, right? Speaking of the subjectivity and the way that we all, on average, love to call our opinions a fact, right? There is a strong difference. There is a significant difference between relying on facts and opinions. Opinions vary on our mood. So it was proven statistically that doctors, whenever you visit them, depending on the time of the day that you would visit them, they would prescribe you more willingly different types of medication, of pills, depending on which time of the day, what time of the day you're going to visit them. That doesn't make sense. However, it happens, right? This noise, all those biases, all those directional and non-directional errors, this unwanted variability that we suffer from every single day for many different reasons that we cannot really project and predict. This is what causes us to deviate from our plans, even though it makes no sense. And one of those is actually our desire to hold patterns, to see patterns everywhere, like this head and shoulders pattern, that we've been seeing for Bitcoin. So there was a little bit of a rundown that I made about the chart patterns on Twitter. It's actually in my pinned tweet. By the way, for everybody who's watching that, this is my official account, right? I've got this golden badge for everybody. It's officially verified, validated account affiliated with the Burb Nest. This is our official account. So you definitely do not want to confuse it with anyone else. There are tons of impersonators. Do not fall for that. I won't DM you on every Sunday night about some special mining opportunities or whatever. That's not me. Don't fall for the scam. Shall we move on? So how is the market reacting overall today? Let's have a look at the Dow Jones Industrials, right? What is Dow Jones Industrials telling us? Well, let us have a look. We're looking at an actual bounce of the 200-day moving average, right? What it tells me is that, well, this magical round number of 33,000 points for Dow Jones Industrials is actually, again, getting pierced back on the opposite direction to the upside slightly. It's bounced off this moving average. And those moving averages, especially if they're long-term ones, the 200-day represents the actual long-term curve, long-term primary trend. If it inclines consistently, it is representing a bull market. If it consistently declines, it represents a bear market. Anything in between, flat or so, is basically a sideways-oriented theme, right? For Dow Jones Industrials, based on the Dow theory principles, we want to have the averages confirm each other, right? Confirm themselves for the sake of clarity in the market, for the sake of continuity in the market, right? So whenever there is a situation that the Dow Jones Transportation, which is the one on the bottom, and Dow Jones Industrials will not necessarily kind of like confirm each other in terms of the movements, then this definitely causes and increases some sort of like uncertainty and lack of cohesion, maybe, right, in the market. This is definitely not the strongest, doesn't give the most bullish implications just yet, right? So the fact that we are in a much sideways-oriented regime, we're definitely hovering around this 31,000 points, maybe 31,500 or so We can see a swing low here, 31,400s, right? This is an average. This is an index, by the way, right? So be careful, of course, with translating that to the actual price action. However, there is, right, 34 700s, 34 300s a couple of times, right? So there's 1, 2, 3, 4 times 34 300 actually tagged. So there is some, again, there is some glue, there is some magnet in this area, right? Something that, well, has made so far the market turn around and around those levels. And overall, since the perfect bottoming out in the October last year, we've been looking at a strong pierce move, above the overall bear market line at that time that kept declining, and moved more towards bullish sideways oriented territory, right? So again, we do not necessarily see so much cohesion between the Dow Jones Transportation and Dow Jones Industrials, right? You can tell that there's been a lot of, again, lot of differences. The best ideas, the best situations are when both incline at the same time, just like it did here and here, right? So there is this lack of confirmation from Dow perspective. If we're looking at S&P 500, another pierce and powerful comeback day above the 4200s, right? After a local slip above 4212, almost 13. So there's for sure some local, again, setback, some local level of, anytime we would go and try and attempt and break out over 4200. This seems to be some sort of like a magical level that just keeps getting rejected. However, because of that, if it actually just breaks through to the upside, I would argue that it may bring so much more technical sense, right? So much more belief, regardless if it comes from the nature, from the very specific of the market, specificity of the market, or just because of our magical thinking. One way or another, if it breaks out, I would definitely not want to be trading counter those long-term breakouts, those massive breakouts, right? So closing definitely over 4,200 is going to be, especially that it closes the week today, I would argue that it's going to be a powerful close, something that can extend the further gains into the next week, right? So we'll see. We'll see about that. However, it's looking fairly positive. 1.27% up on the day so far. Still a couple of hours to get closed. However, overall, it's looking like a good setup for again, for a powerful breakout, right? Some people could call it like some, ascending triangle pattern, whatever. Doesn't matter so much about what we call that, because what matters is that we are looking at a fairly positive case, right? The one thing that I would be cautious about is that, following my great friends Jeff Hirsch, whom I kindly recommend that you actually follow. If we go to Jeff Hirsch, he's continuing excellent, outstanding legacy works over seasonal patterns, and providing so much value, so much insane, beautiful seasonality patterns, including the Memorial Day that is coming actually next days, right? And anything after the Memorial Day basically starts off officially the summer time in the markets, and summers are slow. Jeff actually recommends dividing the year into the best 6 months of the year and the worst 6 months of the year. And the best 6 months basically come up October through April, and anything in between, that is May through September, is basically considered the worst 6 months, right there. So arguably, we are starting off the worst 6 months of the year in the most bullish year on the record as a whole, right? Because the 2023 is a pre-election year. I keep talking about that every single time I get on the stage on keynotes, just like I did yesterday. And 83 to 84 odds that we are closing bullish for this year historically. There was only one losing year since 1939. This is exceptional data. 84 years of data. This is not some sort of like a one-trick pony gimmick, scam. 84 fucking years. This is 3 times as long as I live, basically. Right? So do not undermine that. I would recommend kindly. And just looking at those seasonal patterns, we can actually come up with some conclusions that tell us something about the future. It looks that some of my camera somehow stopped working, so I'll go to figure it out somehow. There might have been some case with the camera, whatever that is. I'm going to switch off right now and figure it out somehow. Right? So please excuse that. Either way, let's keep it going. Let's keep it moving. So So yeah, definitely some decent green points in the market today on the major markets, right? If we go lower, Dow Composite again up on the day, Dow Jones Transportation down up a little bit, Nasdaq definitely stronger move up to 40%, right? 2.40%. So it's good. Consumer discretionary, very strong move up, and an actually strong outperformance against the consumer staples. This is something that we want to see in a bull market. This is something that in a relative strength ratio gives us this very powerful bar to the upside. It's a very powerful breakout bar, right, on the relative strength ratio, telling you about this overall direction in the market, right? The relative strength often precedes the actual price action. So looking at this preferable breakout in the preference for the risk assets, cyclical stocks versus just like, again, consumer discretion is something that depends upon your discretion. When you feel good about the future, when you expect something good, that you have enough money, you can afford that. Just like buying a car or buying some big, some decent goods, right? Something that you wouldn't be able to afford when the times are bad. Uh, this tells us about the overall preference of the risk assets versus the risk off, right? So we're looking at a powerful breakout that, to my best understanding, may actually signify and validate and confirm further following the first breakout early this year. This turnaround that the market is having right now on a relative strength ratio basis to push us further into the bull market, right? So this is about preference. It's not so much about only isolated XLY versus XLP. This is combination of both. This is a ratio of both, right? So it tells you about the preference of one over another. And this relative preference is basically what drives the market eventually. So it overall is good. If we are to move on lower, right, what we're looking at is the 30-year bond prices are actually declining right now. And they're declining sharply, right? Following this lookalike head and shoulders pattern, basically breaking bearish crossover on the 20-day moving average versus 200-day, basically confirms that there's an extensive move to the downside in the direction of the primary trend that keeps declining. That tends to actually move along with the TNX, which is the 10-year note, treasury note yields, right? That have definitely pulled back strongly to the upside, recovered above this local resistance level, if you will, at 36 points, confirming again, getting some decent confirmation from a 20-day crossover over 200 days, and the 200 days continues to inform incline. Arguably, again, it may take us further, especially that there have been some hints about the potential rate hikes coming up still, right? So what I'm about to show you is this inverted yield curve, right? This yield curve inversion is basically present right now still, and this yield curve inversion is something that is not healthy, something that tells us that there is a shift on the economic side of the market, right? When there is a preference for the treasuries, right? And that the actual long-term, like, let's just have a look here, right? This is a typical healthy yield curve, right? You can tell how it actually changes. So the closer to the actual recessive times we come up, the yield curve starts inverting, right? This happens typically after rate hikes. And this is a situation where there is a change in the direction with the maturity, right? So the longer the maturity, the lower the percentage. On average, you can tell, right, there is this heavy decline and preference over the short-term yields, short-term treasuries. So that is typically what is a leading indicator. This interest rate spread, 2 years minus 10 years, is a difference. 10 years minus this difference, this parity in between the interest rates and the 2 years and the 10 years is basically what tells us and translates into the recession, right? Another way to look at it is, like I said, if we go ahead to stocktrust.com, this is what I use, your dashboard. This is my dashboard indeed. If we have a look at this, where is it? 10 years minus 2 years, right? This is the chart that actually represents the 50 years of data, approximately 40, 50 years of data. And what we're looking at is the still deepest yield curve inversion since 1980s, and it's not going away. It's not fading away. This is what tells me that it's serious, right? On top of that, there have not been many cases on the record when deep yield curve inversion didn't end up with recession. So again, even though we cannot predict the future, just like you cannot predict weather, However, typically summers are more, the temperature during summers is greater than the one during the winters, if you are, if we can argue there, right? So, and that's been going on the pattern for the past 200 years or so, or maybe thousands of years. So even though you don't know the future, you're still probably not going to take a warm, thick, cold jacket into the summer vacation, right? Even though you cannot know the future because you're relying on the past data. Same way here, if every single time, basically on the record in the recent history that yield curve inversion went so deep and it appeared and lasted and it stayed there, it brought recession, right? And those recessions were significant. Something not to forget. It does seem to me. Please let me know, guys, if this is clear so far, how you guys are doing still. Let me know if there are any questions in the chat. My good friends from Microsoft, Adrian is one of the best young Polish educated traders from Poland, greeting from Las Vegas. My man, Marcin, great guy, excellent people. Everybody definitely make sure to search around about Microsoft, good friends. And yeah, if you have some questions, feel free to drop them in the chat. And if you're watching that, by the way, on YouTube, congratulations. Do not forget to hit a like, smash the notification bells. Also, they do stay notified every time we put up a new content video piece on YouTube, right? We're putting many of those. And you may want to be aware that there is the subscription button. So hit the subscription button as well. Subscribe to our channel for more quality content. And speaking of Bitcoin, right? Because eventually we're putting everything that is going on into Bitcoin. Bitcoin USD pair definitely makes us have a look at the pair of, or I should say, what's going on with the dollar, right? So if you have a look what's going on with the dollar, you can tell that there is strong move up, right? And this strong move up is also preceded by the big bullish dollar fund, UUP. And it often gives you a little bit of a hint and a heads up before the market actually happens on or is made on the dollar, right? So here's what we're looking at: the powerful breakout above the 200-day moving average right over here, right? This is something, well, that took us potentially into the local swing highs area. So maybe some local setback, maybe some local headwinds. This translates, big bullish dollar fund basically tells you about the translates to the demand of the dollar, right, from the institutional side. And on top of that, you're looking at the disparity in this change, right? So looking at the UUP potentially may give you some hints and heads up, like I said, on what's going on with the dollar. And the dollar is here, right? It's 104, and the actual equivalent of the UUP for dollar is the 200-day moving average right here. And we are over to the 200-day moving average with a strong, powerful close and even a breakaway gap right here. Some local gaps in the meantime, happen on the way up. So we'll see about that. Maybe it's an exhaustion gap. We'll see, depending on how well it sustains over the time. However, looking at the dollar, we still, again, this point of equivalence is actually here at the 200-day moving average at 100 almost in 6 points, right? So there is still some way to catch up to the upside, especially with the fear of the upcoming rate hikes, something that we cannot ignore for sure, right? So how does it translate to Bitcoin? Inclining dollar typically is not bullish for Bitcoin, right? Because, well, when one becomes expensive, the other one becomes cheaper, expressed in those currency of that is more expensive. So arguably, we are looking at some local turbulence or local, how we call that, like a lazy turbulence, right? Something that is a little bit of a disruption. We're definitely looking at a complete head and shoulders pattern, with this difference that we cannot, again, ever know, only in hindsight, except for in hindsight, which way the pattern is going to unfold, right? There's only some historical probabilities. However, again, there are no certainties about that. So looking at this complete head and shoulders pattern technically puts it as a potential target, from 26,600 all the way to 31,000. That typically potentially would take you to, well, somewhere in the $22,000 area, right? 22,700 approximately is a 200-day moving average that continues to incline, right? So there is, even though there is a correction, like a head and shoulders or some lazy sideways that is going on right now locally, it does not cancel or trim the the bull market, right? The bear market that has been inversed into the bull market. So inclining 200-day trend translates and is the direct proof evidence of the bull market. If the 200-day trend, the primary movement, the general overall shift and the tendency of the market is basically reversed and it continues to move consistently for past 5 months to the upside or so, or maybe here for the 200-day moving average, simple, it's for the past 2 or 3 months. Regardless of that, inclining line represents a bull market. And when I say it's a bull market, it's not me, it's not my opinion, it's not what I think. I don't care what I think. I'm wrong 70% of the time on average when I take my trades, right? I may be wrong because I cannot predict the future. I have not a single piece of idea what is going on. Maybe I'll die while going back home from this office. I don't know. So still, not relying on opinions, but relying on facts. This line is moving up. This is a fact. This is not my opinion. This is a fact. If the line representing a bull market is going up, this is a bull market. That's not my opinion. This is a fact. As simple as that, right? So we are in a corrective tide of a bull market. Typically, corrections during the bull market are buying opportunities, right? Because, well, the bull markets tend to continue to move up on average, regardless of some local turbulence, of some corrective tides to the downside, and so on and so forth. Actually, if we get a correction to the downside and during the bull market, this is a gift. This is a gift. That's something that I'm always that I would always take advantage of, right? This is a gift, and if I ever get to see, which I probably will at one point, the retest of the 200-day moving average, be it at $23,000, regardless what that is, I'm most likely going to add in and chip into my long-term Bitcoin collection, right? To my long-term Bitcoin holdings that I do not touch, as opposed to my position trade portfolio, which is the other half of my crypto portfolio, right? So overall, again, we can only know, about the head and shoulders after it breaks out. We have no idea. There has been some local reasons to believe that this local failed breakout may take us to the upside eventually, because failed breakouts forced to close or the underwater positions on the underwater short breakouts and breakout shorts, short sellers, trapped here and basically making them cover for the losses, buying back higher, right? So this builds the demand from covering the shorts that are over leveraged that were wrong. On top of that, if there is some demand coming up, this may actually contribute to the local app swing, right? On top of that, we have the most beautiful horizontal trend line support that you can find probably in textbook, right? This one is going in the books. That's for sure. When I write a book, and I will one day, I don't know when, maybe this year, maybe late, maybe next year or so, I'm definitely going to include this example, not only as a perfect combination of the polarity change as a support that later was broken and retraced as a resistance, pump, hit, retest, so this is a perfect polarity flip on the record. And then you have this beautiful head and shoulders. So Bitcoin is a very technical asset right now, very beautiful technical patterns right there. However, the clarity is on our side, because the clarity tells you that this is a bull market. So I would focus for my long-term position, for my long-term trends, long-term holdings, that whenever I get a 200-day moving average retest, I'm in additional. It's not going to be some massive stuff. Maybe I'll chip in 50K, maybe 100K or so. However, I definitely want to contribute to the rising trend in a buying opportunity. Other than this, I'm following my private trading system. That is fully dependent upon the volatility and it is trend following breakouts, right? So it follows the trends when they break out. This is my system that gave me actually entry and an alert at 16,920 that I entered a rally towards $23,000, 22,800 if I'm not mistaken. Got a little bit of chopped in the sideways. That's what I do. I get chopped in the sideways, and because market moves 70% of the time in sideways, I get chopped on both sides of the range, right? Because this is not a trend and I'm a trend follower. So anytime there is no a trend, I would lose. And I would have those filters defined, not to lose every single time. I would define my filters based on adaptive ATR algorithm, right? This is something that was designed by my excellent talented friend, amazing scientist, Signalify, that you can actually go ahead and follow him on Twitter as well. Beautiful mind, incredible, smart man. Kindly recommend you to follow him on Twitter. So what it does, it's definitely not a super trend, right? It's not a super trend that you cannot find it publicly on the TradingView library. This is not public. This is my system. It's enabled. You can get it and have a read about it on our website at theburbness.com. Actually, if you have a look at theburbness.com, our native website, go ahead to the Burbicutor Pro. That's the name of the whole toolkit that I use. You can choose, of course, to sign up for that if you wish. Otherwise, there is a little bit of an explanation for how it works, and you can even read the full documentation. It's public, it's transparent. You can read all of those rules, and the best part is that you can use it in so many levels. There are setups and settings for using dual price trading trailer system, which is something that I use. The momentum bands, the visual modes, automated price levels, that is support and resistance, view block, relying on the price and volume connection, divergence, signal system, scalping systems. You can combine all of those because all of those are custom created, and those are uh, cases where you can apply those custom created indicators as well. None of them can be found public. However, full explanation is right there, explaining trend following and so on and so forth. This is pretty incredible, everybody. And it's profitable. It's proven to be profitable. It's proven to give you profitable, reliable results. Even in the worst case you can imagine, it gives you about 60% in the backtesting, 66%, I think, annualized return. Not annualized return, average return, nominal absolute return in year over year for backtesting, right? And this is something again that is that has been proven to be profitable. So I will lose maybe seven times in a row on average, about 30K, maybe 40K, But then when the actual longer tail in the market comes up, I rally along with it, right? And this is what takes me basically, again, from 1600 to 2200s, right? From 2200s, from 22,000, sorry, to 29,000s, right? Gets me a little bit chopped in the meantime on sideways, like I said. However, I lose not much, and I expose my portfolio to, and I expose my position account to long tails. And those tails, I'll just rally along with it whenever they come because they are gifts. And I love it. And I just sit back and let the trend unfold and roll over. Roll on and on until it rolls over. Incredible. And right now, based on this adaptive ATR algorithmic system, basically what it tells you is that the main daily, this thicker line is a daily trailer. This thinner line is a 12-hour time frame trailer. So it is dual price trailer system, right? This gives me a daily trend, and this gives me a mid-daily trend, and this is what I care. I trade based on mid-daily trend. However, I would want to trade with the direction of the daily trend again, right? So best if they both align just like they did here. Otherwise, there's disparity, some noise, confusion. Market is confused. It flips back and forth, chops around, keeps losing me money. However, the losses are small, right? So I would wait right now for a reliable breakout outside of this range, right? I would need at least a break above the stop level, current temperature, the stop at 27,314. Ideally, if it closes on a day above 27,757 or 27,800s, right? So this gives me a volatility-based area, very sensitive volatility-based area of the resistance. Because when I know that the market kind of like knocks on this door and just flips around and it just rolls over and continues to knock and just not get in, this tells me that the market actually can continue lower because the overall setup is that the trend setup is bullish. Is bearish. The trend mode is bearish, right? And it flips from bullish to bearish in sideways pretty often. However, for now, luck has it that it's actually bearish and downside oriented, right? So unless we see a reliable break above this very strong 27,300s, 27,800s resistance cluster, right? Coming up, not just out of my head, not just some random numbers that I figured it out. This is a volatility approach on dynamic ATR. At ATR, there's adaptive that actually adapts to the bear market and bull market conditions. It gives you a little bit more space not to get chopped in the bullish market, and it actually helps you stay more protected when the bear market comes up, right? So I would want a credible breakout above 27,300 at least ideally 27 and 100. When that happens, I get a confirmation on both sides, on both trailers, on both trends, that the trend has flipped to bullish. And this would give me a lot of reason to, well, not only enter my position, right? Um, 500k plus or so, probably depending on what position size will come up, and more. So I would actually use my position size manager created by the mentioned Razorn, right? So we can use this position size manager. Imagine I would enter a position around 27 500s. I would set my stop loss depending on, well, of course, this is going to be about 3 ATR. 3 ATR is going to be, well, depending on what kind of it is. If the volatility is low, it's not going to be much. Let's imagine again, three ATR is going to be somewhere around here. Just imagine, right? Probably a bit lower. And then whatever targets, just for the record, is a trend follower. I don't use targets. However, it works with the targets because you can use this for range trading as well. So imagine we have a setup like that. I can account and use my position size again calculator, right, to make it a bit bigger, normal size, right here, right? And it's actually in the cast. It's a custom indicator built by Razorn again for our incredible by the Bourbonist community. Imagine my account balance is, I don't know, whatever, 1 million. What is it? 100k, 10k, whatever. You can let's call it 10k, whatever. Just for instance, you want to risk 1.75%, right? You don't use leverage, or if you want to use leverage, you could press 5x, whatever. You have a defined entry, defined stop loss when you know that things are wrong, and you have a whatever target, even though you don't need it per se. Uh, and what happens? It automatically actually gives you the position size, right? It translates to your position size. How much position can you get in, basically engaged and input put in this position. This is, well, this is pretty cool, right? And it's going to, of course, consume this amount of margin from you. If you trade in on leverage, if you turn off the leverage, and if you make it one, this is naturally becoming margin, and the position size is one and the same thing, right? So this directly and easily tells you with no calculations, no pen and paper, no calculator needed. This does the freaking work for you, gives you time to figure out your dinner, to go ahead and take care of your kids, go ahead and chill out a little bit more, and does the work for you. And it's free. And it is free. You can get it for free. And it actually comes for free when you sign up with the ref link that you're going to find with our partners. Those are our partners at Bybit, where with whom you can get one of our products that you typically would pay 1,500 a year. You can get it for free at no cost, right? The only thing you have to do is just basically sign up with the ref link and deposit 100 bucks. There are some instructions that I'm going to kick off right now. You can go ahead and Google at theburbnest.com/COBB. You can get it. Those are our partners. It's officially contracted. It's official deal. It's disclosed. Everything is here. We get some share of the fees from trading volumes or so. What matters is that you can again choose. That's your choice. If you want, you can pay 100 bucks a month. You can pay 355 bucks per 4 months, or you can basically get 950 for a year. Which typically, if you were to renew monthly, was going to cost you around 1,400. And you can get calls only with Bybit, this official contracted campaign promotion that you have with our partners at Bybit, and just follow very simple steps that are right here at theburbnest.com/COBB and activate free calls only access with our premium calls. And there are so many of those. There are so many of those that you can get. They are right here. Calls only. They are automated. You can get those automated calls. Those are profitable calls from profitable systems, validated, proven to work, profitable. Again, all of that is evident. All of our records are profitable. All of our records are proven to be profitable over the longer time. Of course, the losses are inevitable. However, if you stick around and take part in those calls, eventually you're going to be profitable, more likely than not. However, it's upon one's execution. Having a call and following it is two different things. Most of the time, is minds love playing tricks on us. Both sides, shorts, longs, depending on the market direction. We have also legacy call side to it, right, where we look at legacy market, traditional finance, there you go, by excellent J traders. So you can get all of that for free. As simple as that, right? And the only thing you'll have to do is basically go ahead and click on the link here, or just type it in, put it in your search, theburbness.com/bybit, or go to theburbness.com/COBB. Other than this, again, the conclusions are that even with the still high energy prices that are not good, right? They are draining money out of your pocket, leaving you less disposable income. With this, dynamic yield curve, of course, skewed to the downside, showing the yield curve inversion. Those are not the most favorable conditions. Likely, they are going to lead into into actual recession. It's going to take some time. It's not immediate. The economy, the business cycle lags 6 to 9 months behind the markets. And Bitcoin has been there, right? Bitcoin has been there, and it may happen that, again, if we fail around and trick all those head and shoulders believers, which may happen easily, why not? Right? Then the failed pattern is going to turn into a failed pattern. Failed patterns tend to perform better in the opposite direction, which would make me think that there is a lot of reasons. I'm not going to trade based on my opinion. I'm going to follow my private system that I showed you. However, if I were to guess, my guess is that failed patterns tend to perform better to the upside. Better in the opposite direction than anticipated. So if we have a downward breakout and it fails and it actually trigs back and hits back above the support, high chances it's going to not only go past the actual previous highs for trapping and adding liquidity from depressed short squeeze right there, taking us further. Of course, positive feedback loop, people jumping on a bandwagon just because the prices are rising. Lots of reasons to believe that the next target for the actual breakout, 15,500 all the way to 25,500, the breakout is still valid, right? It's a breakout retest right now. It may take us to the potential objective around the measured move target, 35,500. So lots of reason to believe we may stop and get a little bit of a setback, a little bit of a headwind there. Typically, when the price hits a level, some round numbers or some targets like this one, even though they do not necessarily need to be defined by nature, they would often find some magical thinking in loss aversion building around that, making people close their positions before the resistance is reached, taking away uncertainty, cutting the winners and letting the losers go, which is something that is completely opposite to common sense. So other than this, unless we see a powerful break, probably over, again, $28,000, 27,300, 27,800. This is what we define by the adaptive ATR available with my private trading system on the website, right on the Burbicular Pro. Feel free to read about that. Go ahead at theburbness.com. This is our website. Tons of valuable resources, by the way. If you do not wish to be a buyer, you have always a free newsletter that you can sign up and get with free incredible insights every single week. Tons of infographics that you can go ahead and read about. Plenty valuable mechanisms explained for how trading works to give your more profitability over the time. So long story short, it seems that Bitcoin, again, needs to break 27,300, 27,800, ideally to be bullish back again. Otherwise, the bearish mode is set again to the downside. We're looking at the potential break, right? That may take us into the lower or mid $20,000 based on the records. However, if the hand and shoulders fails and there is some breakdown and an actual turnaround, it actually has happened already here. So we may be on the bullish side of the curve already, and without even realizing that. It may take us past $35,000, in my opinion. I may be always wrong. Do not trade based on opinions. Do not trade based on my opinions, for sure. And yeah, if you want to get access to those profitable signals that we have proven, evident, transparent, all of that, feel free to go ahead at theburbness.com/COBB and get your activated access. It's quick, it's fast, it's free. Do not fear. It's free. It's not going to charge you anything. God bless you all. Thanks for tuning in. Make sure, again, you hit the subscribe button, smash the likes, hit the thumbs up. Leave some questions for the comments in the comments, and I'm going to actually come back with my team to answer those. God bless you all. Thanks for tuning in. See you around, and I'll catch you on the next show. God bless you. Bye-bye.